when we weren't buying, when everyone was selling. So I'm looking at MEXC now on TRVL, and I've noticed this line here. Don't know if you can see it, but there, and most recently to there. 1, 2, 3. So we've attacked that line 4 times now. So that's quite a, it's becoming quite a weak line now. Slowly this line is weakening, this neckline. It's not a head and inverse head and shoulders, this neckline, not yet, because we're still in the head. Potentially could become some kind of inverse head and shoulders. We have to see how this plays out. So we could be in the right shoulder now. If this does this, we don't know how this is going to play out. It could be a really weird looking right shoulder, or it could, see, I don't know how this is going to play out. I don't really want it to go down, but I don't know. This is quite interesting. And then obviously when you're looking at the other exchanges, there is something similar but not as precise as MEX. Similar but not as exact as MEX. Yeah. I think it's very nice on MEX. Have a look at the other ones. This looks correct as well. This is 3 times. That's KuCoin. So we are potentially, you know, that could be the right shoulder. I mean, the right shoulder can look very unusual. Morning, David. All right. So David, just FYI, because you're going to watch it later, Bitcoin has bullish CVD. It's quite bullish at the moment. So just FYI, just in case you're interested. Let me have a look on Bybit as well quickly. Let's see if that's the same. Yeah, there is something going on here. I can't put my finger on it, and I don't know, you know, I don't know, like, is that, you know, there is something going on here, these highs with this kind of not so steep neckline that's forming. So before we had this, I'll go back to MEX. MEX is probably the best one. So if anyone is charting TRVL, go and have a look at MEX. Obviously we have had let me get rid of some of the stuff for now. Get rid of that. Get rid of these channels. That's the one. The trend line is the one that I want. In this text. Okay, there's this wipe of text. That doesn't really matter. Let's forget that. So that's all right, that's clear. So we potentially there's a neckline here. I don't know if anyone can really see it or agree with me, but potentially there's a neckline there. Yeah. So we had this higher time kind of trend line from there to there to there, which we broke, and we back tested on the weekly candle. Yeah. So this one's broken now, but the fact that we've gone in and hit another one which kind of lines up, and now we've hit it more than 4 times. If you consider that this is a weekly time frame, once, twice, 3 times, 4 times, 5 times, 6 times, we've hit this neckline now 6 times. 6 times. And the way it works is that the more you hit these lines, the weaker they become. Yeah. And eventually we will break this line. And I think it will be quite impulsive. The break is going to be very impulsive. Yeah, I think. For many reasons. But it is interesting also how this neckline corresponded with this 9-cent horizontal line that I have here. You see that? And I've marked this 9-cent line forever. So if you ever go back to my first video, I will always say that 9 cents is a significant level because it was the launch price of this token. And the fact that we've come up into this neckline and this 9 cents line roughly at the same place, roughly, it's like a smither away. Obviously it held. There was a bit of strength there, and mainly because it was the 9-cent line was holding. Yeah, not necessarily this neckline, but the 9-cent line. But the way it works with these higher time frame lines is the more you hit them, the weaker they become, and it's just because of liquidity. You're taking liquidity, so the next time there's less liquidity, so the next time there's going to be less sellers. People aren't going to be going, okay, I'm going to sell again at 9 cents. Some people will, but some people already have, and they're not going to do it again. They'll do it once, they won't do it twice. Yeah, or maybe the second time they'll do less. That's how it works. And so there's going to be less liquidity. So the next time we approach this level, there's going to be less liquidity, which will hold the price down. Yeah. And so this is quite interesting. I do have an idea that this is quite significant and potentially could mean for a bit of a breakout once we clear it. So just keep an eye on that. And probably MEX is the best chart to keep this line on. Let me change the color actually so we can see it clearly. And I'll make it thicker as well. There, that red line. See that? Oh, and it's quite interesting because there was a lot of confluence there. Because look at this mid channel that I have on this channel that I've drawn. There, you see that? Oh my god. See how powerful hindsight is? And you just don't know how the price is going to react, but it was obvious the price was going to reject from that level because you have so much confluence there. The next time it crosses, it's not going to be as powerful because simply we would have moved on and the confluence would be spreading apart in terms of this midpoint channel, in terms of this red neckline that I've got drawn, and obviously the 9 cent, they're going to be coming apart. So it'll be a lot less, and obviously because of the liquidity that we've taken in the first instance. This is quite interesting. Obviously if it happened earlier it would be more powerful, but I think the fact that if you zoom in a little bit, you see how the prices come into that level. Yeah, interesting. All right, so David showed me a higher time frame harmonic, and I just wanted to draw it out. And I had a look at this before, and I'm not going to draw it on this chart because this chart is already messy. I'm going to go on to, actually maybe I should draw on this chart. I'll just hide these then. Put that trend line in the higher frame ideas. Right. Let me pull it up actually, because I can't remember. So this is gonna look really crazy, this harmonic that I'm gonna show you, and honestly I have no idea if this is gonna play out or not, because it really is unbelievable if it does play out. If it was to play out, then I I'm going on a holiday. That's the plan. And then I told Cynthia, I said to her, Cynthia, when we get up to 1 point, whatever, the all-time high, I'm going on holiday. She said, for me, you're never going on a holiday. That's funny. So I will go on a holiday if this plays out, trust me. So he's got this in reverse. David, why did you give it to me in reverse? It's so annoying. How do I turn this around? Oh, why did he give it to me in reverse? All right, I'm going to have to draw it in reverse. Oh my god, see that? Haha, I can fix it. Look, this is how I fix it. Let me delete it. That's something new today. Reverse the chart, paste the drawing, and then reverse it back. And now it's back into normal. Is it? No. There. There. Reverse the chart, paste it. Should go back to normal. No. Why does it do it like that now? Do it before. Good morning, Craig Shot. How's it going? I'm guessing your name is just Craig. I'm just going to call you Craig Shot Gaming. I don't know. It's weird, huh? Right, let me just do it in reverse. This is reverse. I don't know why David sent it to me in reverse, and I can't figure out how to turn it around. There should be a way. Can't I just... No? Oh god, so annoying. Alright. Let me do it in reverse and then we'll see. Wow, it doesn't look good though, huh? This is not going to work. Let me go back to Signal. Let me download the image. And then let me try and rotate it first. Edit in, open with paint. Let's try paint. Okay, I can rotate it. How can I rotate it? Edit, view, rotate. Yeah, 180 degrees. Yeah, got it. File, save. Okay, good. I've got that. Edit, select all. You're not seeing what I'm seeing, so don't worry about it. I'm just talking out loud. Okay, that's better. So as I was saying, this is a... No, that didn't work. Okay, I need to mirror it as well. Give me 1 second. Now that I've done that, let me mirror it. Flip horizontal. Let me do that. Alright, sorry about this. This looks shit. But David sent me this harmonic, and basically I have no idea if this is going to work. No idea. Hold on a second. All right, sorry about that. I've got to have lunch in half an hour. So this could or could not work. I have no idea if this is going to work. So let me just draw it out first, and then I'm going to give you my thoughts. And we have had this idea in the past, but if I bring my higher time frame ideas, so he's looking for a B to B, that's the B. So the only one that I need to pull up is the time. Right. It's the time. And then the D and the X. Okay. Let's see. Technically, this is the harmonic. Let me see if I get the numbers right. I don't know what time frame he's done it on. 1.68, 618, 1.1, 1. It should be a 1-to-1 really. Don't know if it's a 1-to-1. Should that be a 1-to-1? That would be a 618. Up there. 620. I don't know what numbers that should be either. Have a look at something actually. Go back and get the original one and see what the numbers are. That one he's got 688, so I think he wants 618. That's a 21. Okay, that's roughly what we're looking at, and that's like a 1 there. So something like that. That is a correct harmonic. It's called the 5-0. So let me just let me go and find a. Maybe it's not a 5-0 then. I don't know. It's quite longer though, David. It doesn't work really. That would be. It's quite long. This is not right. What he's given me isn't right. Because then that would be more like there. It would be there. That would make more sense. If there's a 5-0 like that. A. Let me check something else. Sharp. I think it's a shark. I think it's a shark, not a 5-0. It's a bearish shark. No, it can't be because the C is lower. This is the one. This is it. A shark pattern. Let me look. I don't know. I mean, his idea was this. But then surely that's like this, no? No. I mean, this looks more correct, right? But then that should be in a line. It should be like that. According to this, that's a straight line. So actually that should be more like should be higher. Because according to this, that line is straight. See? Straight. I honestly think that would. I honestly think that is better. And then you have a straight line all the way up to hit the above the all-time high. Then November 24th, it sells. Don't know. I don't want a bearish harmonic. I want a bullish one. That's the thing, isn't it? You want a bullish harmonic. You don't want a bearish one, but these are bearish. And this is a 5-0. Let me have a look at the 5-0 again. So look, a 5-0 is a sharp followed by a pullback to the D, which is actually bullish. So it's actually bearish at the C. I mean, they've labeled their points. They've labeled their points differently. So it's hard to know. Maybe that is back down there after all then. A, B, C. It's quite subjective because this makes more sense, because the thing about the bearish, this one, you need a straight line, whereas with this one you don't need a straight line. You can just go up and then across like this. See that? But then this this says C here, ignore that. This is D, ignore that. But this is prolonged. That's more of a prolonged move up to that point with a pullback, and so therefore the top of this B becomes your support level for a pullback to the D. Will it come in April to go up? According to this, then you're I mean, if this plays out, I don't know if this is playing out, we're just having fun, right? And then that will take us to December, which is quite a long maybe it goes up and then whatever, maybe it goes up and then does that. I don't know, because I don't really want it to end in December. I want it to end sooner. But obviously there's a big fib pivot. Craig is asking, does the D stay above the A on... I can't see because it's got a stupid heart on my front of my... Oh, that's better. Let me do it like that. Oh. Does the D stay above the A on the harmonic trader chart? Yeah, no, it's at the same point. So that's the back test of the horizontal level. So that would make sense in the sense that in terms of the Elliott waves that I have, if I pull my Elliott waves back up, this is wrong. Let me just pull it back. So if, let me just say that's the one there. No, I don't know. See, I don't, this 5 doesn't have to, like, who knows what this 5 is going to be. But if this is a bullish harmonic, so you would expect it to be more bullish. And then the 1 would be there. And the 2, you're looking for a pullback somewhere to go up to the 3. I don't know. So let's just get rid of this one. Let's just go with this one. So basically the D here is coming to backtest the A. So that would make sense to be a 4 on the Elliott wave, because the 4 would come, it can't come below the 1. So if we're in the 1 now, and the 1 ends at, but this means the 1 should end, it depends, like, that means the 1 should end at 14 or 15. And I'd rather the 1 go, I can't make it happen, but I'd rather the 1 go a little bit higher. So then that means then if the Elliott waves, then that 4 can't come underneath the 1. And then this goes back to the 9 cents. But according to this, I don't know if this is correct. Like, does the D have to come back to the A? Can it come higher? I don't know. But I think the idea is that from the B to the C to the D, that's 50%, right? So maybe it's only 50% that you should worry about, and not worry about whether it comes back to this point here. So let me just do it based on fibs. That's 50%. So look at the 50%. So you're expecting wherever this gets to. So let's say for the sake of argument, we go up to like $3.50. Then you're coming back to the 50%, which is 25 cents. And that would be, so it wouldn't necessarily matter about the B. It's actually what you're looking to do on this is whatever you get to this, then you're only coming back 50%. So maybe you don't care about that point. It's more about getting to the 50% of this move to go up. I think that's what this is. And the C is arbitrary. Maybe the C can be higher. And so you're still looking to come back 50%. From this move, you're coming back 50%. And at the moment, this is perfect because the 50% would line up with the A. But maybe it can just be higher. I don't know. So this is something that we have to see how it plays out. If it plays out. Just keep an eye on it. I think this is better, and I'd like David to have a look, because his original idea was this, or this, just above the all-time high. I just don't see it. That would be a shark, which I had before, but even then that doesn't work, because then the this has to be over here, and then this actually has to be, this has to be a straight line. So then that's what you're talking about, and that's bearish. That's not a bullish harmonic, which I don't like. But you know, you have to go with it, whatever it gives you, right? So I'll leave that there for now. And then if anyone is a harmonics expert or anyone has another opinion, then please comment on this video or just message me or something, and we can have a look at your ideas to see what you think. I wouldn't be surprised if there is a higher time frame harmonic at play at the moment, just simply because of the way the fib time is working. I wouldn't be surprised there's other kind of fib stuff going on. So I think it's for us to just try and figure it out and discover it, you know. That's interesting, huh? Can you imagine? Let me see, actually. If I let's do this based on fib, actually, just for a second. I'm gonna do it roughly because I'm not in a fib extension. This goes up to $5. Let me get rid of this linear waves. So that goes up to the, let's say you have a fib to there. That's your 50% at 30 cents. So coming down from $5 to 30 cents. It's a big drop. And then we'll do a trend-based fib from here to here to here. And our 1-to-1 is $94. And the 618 is $10 from here to there. It would be a big dropper to come all the way down from $5 down to 30 cents. That would be, I think a lot of people will be shitting their pants if that happened. They think it's really bearish. But actually, if this, like, this is the thing, if this harmonic plays out, this is a bullish harmonic, the entry would be the 50%, right? And so people who are following this harmonic wouldn't be afraid of entering at the 50% mark at 35 cents or whatever it comes to down here, because you'd basically be trading a harmonic, and then you'd obviously be taking your profits at the D here, and so there'd be a lot of capital injection at this lower point to push the price up. It'd be really bullish because a lot of people will be looking to re-enter. Can you imagine if you took your profits at $5.50 and then you had such an injection of volume at the 30 cents? You would get a really expansive move. You know, it'd be really expansive. But this is saying April, and if memory serves me correct, the last bull market on the 3rd week of April, Bitcoin crashed because it was like, you don't want to really be in crypto after May next year, because that's the saying, isn't it? May go away, whatever, sell and go away, whatever it is. And I think we have to be aware of that maybe by May, maybe by the end of April next year, to just scale back your exposure to crypto, and just in case the history repeats itself and we get a big pullback on Bitcoin that lasts all the way through to July. So basically from the end of April next year all the way through to July, I almost want to be out of big positions, obviously depending on how far it gets. You've got to be careful about that, because last time a lot of people got burnt, including myself, and you got to learn from your lessons. Yeah, it was a bloodbath, and it was the end of April as well. Craig is saying April, May 21. So so we're going to be aware of that. And and the problem is this, like so many people are going to be going for like super cycle, institutions are here, countries are adopting, all that bullshit. Yeah. Like honestly, you just have to, you just got to be risk averse. I mean, at the very least, you can't be all in. You have to be like half in and half out at the very least. You have to have enough dry powder to re-add on a pullback, and if it doesn't pull back and it goes up, then who cares? You're still making money. And that has to be the mentality. And so when it comes to next year, at that time, I will be saying that. I'll be saying, if I'm still streaming, hopefully I am, I'll be telling people, look, you just got to be careful, because this is what happened in 21, and you can't be all in. You can't be all in. You've got to have enough dry powder for a pullback, so that if it does happen, you can improve your position and not get hurt. So we have to see how that plays out, but I'm very careful about this. And it's amazing how this fib time lands at the 21st of April 25. You see that? I think this is quite amazing, actually. So we have the fib time on this is landing at some really key events, moments. This is the end of November this year. This one is landing at the end of March, 18th of March. And then this one is coming at the 21st of April next year. And then the last one is actually landing in December. So in my mind, the bull market ends 1 month or 2 months earlier, because last time it was November, and the year before, the time before, it was December. That doesn't necessarily have to be true. Like, I don't know if it's going to be sooner, or it's going to be the same as before, which would be December. And according to this, we'd have to see what Bitcoin, like, and so I'm subscribed to a trading group. I don't need to, but tomorrow, I don't know if you know the guy Daniel. He's doing an Elliott wave analysis on Bitcoin tomorrow evening, Sunday evening. I'm going to watch that and see if I learn something from his analysis, because he's quite good when it comes to analyze the higher time frame Bitcoin charts. And so what I'll do is I'll take notes, and I'm just going to repeat it here for everyone here. So no one has to watch it. I can just repeat all of that stuff and see what he has to say, because he's quite good when it comes to Bitcoin. And we'll see how that lines up. All right. I think this is interesting. We'll keep an eye on it. Let me just